Hello traders, Yvette McCrae, your favorite FX coach, the Pipologist, here to bring you your daily trend analysis for today, July 20th. Let me just go ahead and make my disclaimer and let you all know that my trade ideas are not financial advice. They are just possibilities of what could happen in the market, and know that you do agree to use them at your own risk, and none of my past performances are indicative of any future results. All right, so now that we've got that out of the way, let me go ahead and begin here. Okay, so we are looking at the GBP USD, and y'all know this is the only pair I trade. I tell people, you don't need to trade, 3, 4, 5, 6, 100 pairs to get wealthy. You just need one pair. And if you follow the price movement of that pair, you'll get so familiar with it. You'll know, without a shadow of a doubt, the turns in the market for that pair. So I'm rattling, but, just to make sense here, you only need one pair, okay? I trade this one pair year in and year out, okay? So the way my strategy works is there are 4 major trends in the market. There's the annual trend, the monthly trend, the weekly trend, and the daily trend. Once you know what trend you want to participate based on your trading characteristics, whether you are a positional trader, swing trader, day trader, or scalper, using these 4 major trends will be more advantageous to you. So a day trader and a scalper will be using the daily trend. A swing trader will be using the weekly trend. And the positional trader will be using the monthly and annual trend. And a swing trader can also use the monthly trend as well. So knowing these trends and how to identify them is key. So my students, you all, I give you the price levels for these trends, okay? So we're gonna just work, we're just gonna look at the monthly trend, the weekly trend, and the daily trend for now. I can tell you right off bat that the annual trend is bearish. This pair has been bearish since the beginning of this year, okay? Since the beginning of the year. I'll prove it to you. Let me go to the weekly time frame, okay? This is the beginning of the year right here, okay? You see, January. This pair has been bearish, all right? Another thing that I use in my trade strategy is the moving average, okay? This is a moving average. And so, quite simple, one simple strategy is when price is above the moving average without touching it, you want to buy. When it closes below it without touching it, you want to sell. So, you see, it's been bearish, but it also has been under this moving average. So right here is the high of the year where my mouse cursor is. Let me get it straight here. This solid pink line is the high of the year. This second solid pink line is the low of the year. When price closed below the low of the year, okay, I could have entered this trade, which I did, and rode it all the way down, okay? Just rode it all the way down. And one reason how I know how far to have taken it is I would have used the monthly trend, and I would have used this low using the Fibonacci tool. Watch this. Using the Fibonacci tool from the lowest to the highest, price came down to the 78.6 retracement. You see that? The 78.6 retracement. That's where my take profit would have been, all right? And that's what we did, all right? So now price has hit its support level. And so when you start trickling down to like the weekly, you start seeing that it's starting to, reject going any further, right? Or look at the daily time frame. It's already giving us a signal to buy. All right, so let's talk about the monthly trend. The monthly trend, the high of the month, I'm going to give you the price levels. The high of the month is 1.21773. You'll see that right here. This dotted pink line is the high of the month, okay? The low of the month is right here. You can't see it because price is right there. All right, but the low of the month is right here. That's where I actually bought at, right here. This is the low of the month, okay? And price has already crossed above the low of the month. The low of the month is 1.19729, okay? Price did close below this at the beginning of the month. Let me try to see if I can see it here. Okay, here it is. Price did close below this at the beginning of the month, but you can see it's already crossed back above it, okay? And I believe it's going to try to come here and retest the high of the month, all right? And then try to retest again and then go up. So the high of the month is the price level for the high of the month is 1.21773. And the price for the low of the month is 1.19729, which is right here. Okay. Then we have the weekly trend. All right. So the weekly trend, we're looking for the high of the week, which is right here. And that price level is 1.18908. And the low of the week is 1.18449. Okay. 1.18449. Okay. And so whenever price, and when I say price, the candles, okay, I'm using Hakinashi candles. When they close above or below these highs and lows, the market tends to go in that direction for that week, that month, that year, or that day. Okay. So now today, our new high for today is, let me see here, 1.20196. You want to write that down. 1.20196. And then the low of this new day is it is, let me tell you again, 1.19880, okay? 1.19880. We have not gotten a clear direction for today, but my bias is that price will continue to move upwards. Okay? And the reason I say that's my bias, because when I look at the daily time frame, the daily is giving me a signal to buy. Yesterday closed with a bullish candle, and today's candle for this new day opened above the close of yesterday. So my bias is that it will continue to go up for today. Okay, so sometime during the London session, we will either get a close above or below the high and low of today. If it does not go up and it comes back down, I'm looking for it to retest the high of the week, okay? If it closed below the low of today, okay, at that price level I gave you, I will be looking for price to retest the high of the week, all right? You have all the price levels, so all you need to do is follow price. This is price action trading. All right. And if it's a sell, you want to sell from a resistance. If it's going to be a buy, you want to buy from a support level from a lower time frame, such as the 5, 15, or 30-minute time frame. All right. And if you are a scalper, you're looking to get 20 pips today. If you are a swing to positional trader, you're looking to get at least a minimum of 100 pips for the week and or 400 pips for the month if you're following the monthly trend. So that's my analysis. This is your favorite FX coach, Yvette McCrae, the Pipologist, and I will see you during the New York session today, July 20th at 9:30 a.m. Have a great rest of your evening. God bless you, and I'll see you during the New York session. Happy trading.